Hiya, welcome to my Compound Life. I'm your host, Jonathan. This is a channel where we build assets, we build habits, and of course, we build freedom that will be financial freedom, time freedom for you, me, and anyone else that watches my channel. So please hit the like, hit subscribe, and let me know in the comment section who you guys are. Okay, so I create Bitcoin personal investment type of video almost on a daily basis. So very likely you don't want to miss out my video, any of them. Okay, so earlier today in my earlier video for Bitcoin daily video, we definitely covered some of the possible causes for the Bitcoin dump earlier today, right? And I think one of the other possible causes, which we never quite gotten the chance to cover, which I've done a little bit more digging today, is actually, can the Japan's government bond yield rise be behind today's Bitcoin sell-off, right? So that's pretty big, right? So hear me out. I think it can definitely be a contributing factor. So let's break this down simply. I'll explain everything step by step so anyone can follow, right? So even if you're new to finance or crypto. And of course, this fits into the bigger picture of why Bitcoin dip today, right? I can't say crash because it hasn't crashed just yet, right? It definitely did dip today in Asian trading hours, right? Specifically in Asian trading hours, okay? So remember Asian trading hours, they actually open first after weekend. So they often, they often lead the moves, okay? So quick background on Japan's bond yields, okay? Japan's bond yield. Okay, so Japan government's bonds are like super safe loans the country issues to borrow money. So the yield is basically the interest rate investors get back when they buy the bond. So when the yield goes up, it means bond prices are falling and people expect higher interest rate or more economic hit, like inflation. So the 10-year Japanese government bond yield is a key one everyone watches, right? So from today, that's January the 19th, 2026, the current yield sitting at around 2.27% right now. So it's changed slightly in the past 24 hours. It's up by about 0.09 percentage point or 9 basis points. So that's kind of like a finance speak for a tiny move, like 0.09%, right? But the bigger picture that we all need to pay attention to is the Japanese 10-year government bond yield, it hits 2.24% earlier today, right? The highest since 1999. And that's over 25 years ago, right? So over the last months, it climbed 0.19 points, and compared to a year ago, right? Compared to a year ago, it's up a full 1.07 points. So this isn't a wild spike, but it's steady. It's hitting records for Japan, where yields have been super low for decades, due to Bank of Japan keeping things cheap to boost the economy. And it's definitely gone up, right? And apart from looking at the 10 years, right, which is about 2.271%, look at the 30 years yield at 3.5%. So, I mean, this is how media is also calling out Bitcoin faces a liquidity drain danger zone as Japan 30 years yield breaks a historical record high. Okay, so Tokyo bond traders have a new number burned into their screen this week. It's 3.5%. So For 30 years, the yield is now at 3.5%. Okay, so in short, 3.5% is for the 30 years bonds. Okay, this article, obviously focuses a lot on the 30 years, on the long-term shifts affecting the global liquidity and Bitcoin. So, in our mind, immediately, we all be asking, why is this, yield rising, right? So, the Bank of Japan, Japan's central bank, like the US Fed, is hinting at more rate hikes, right? So their governor, like the Jerome Powell of Japan, Kazuo Ueda, said they're ready to bump rate if the economy and prices looks good. Okay. Plus, Japan's new Prime Minister, Sanai Takaichi, is talking big spending plans. So very likely, like the US government, tons of things that they want to do, and very likely they're going to have to print a lot of money in order to do this, right? So some of her bigger plan was like cutting food taxes for 2 years and calling a snap election on February the 8th. So that essentially means more government borrowing, which pushes yields up. And markets are betting the Bank of Japan to hold rates at 0.75% this week, but very likely they're also pricing in a hike in June. So all of this are creating that uncertainty, right? So we obviously got the Japanese bond yield, rate hikes, uncertainty, as well as Trump tariffs, Europe, Greenland, issues. And of course, how does this all relate onto Bitcoin sell-off in Asia, right? So Asia is huge for Bitcoin. We all know that. Think big traders in Japan, South Korea, and even in China. So China, I'll need to caveat, very likely they'll get the money through some back channels. This is when Japan's government bond yield rise like this can trigger a risk-off mood, where people start selling risky stuff like crypto to buy safer things like bonds, government bonds, or even the currency, the yen itself, because, it strengthens a lot more today, right? So this no doubt affected Bitcoin because higher yields in Japan can create a liquidity drain, right? Like mentioned here, right? Meaning less easy money flowing around the world. Japan has been a source of support for cheap cash for many, many years, right? Where people just comes in, go to the Japanese bank, they borrow cheap yen and invest in risky stuff like Bitcoin or Tesla shares, NASDAQ, S&P 500, etc. So when yields rise like this, essentially the whole carry trades unwind. So we did cover this about Japan carry trades before, and certainly I think during that period the rate the interest rate wasn't as high, right? And then I think more of this unwind we will definitely be seeing, because once it's affected some companies, and the whole thing will eventually cascade down, affecting more or businesses, right? So it unwinds, carry trades, borrowing low in Japan, investing high elsewhere, leading to selling of asset like Bitcoin. So this happened before, like in August 2024, when a similar spike definitely caused up to about 40 trillion yen, huge amount, by the way, in deleveraging. So hitting Bitcoin and crypto hard and really bad. Okay, so short term, no doubt, it's bad for Bitcoin, right? We definitely see it drop, right? I do anticipate more drops coming, possibly. Right? I might be wrong, right? So yeah, I think we'll definitely see more volatility and dips if the yield spike fast, right? So rate increase, the yield spikes fast, definitely more pain for Bitcoin and a lot of the growth stocks. But of course, if the Bank of Japan backs off or slows down or pauses or reverse of its current, quantitative tightening path, it could definitely ease up and help Bitcoin to rebound, right? But personally, I don't anticipate or foresee any of that to happen anytime soon. Okay, so today specifically, yield jump in Asian hours, Japanese stocks fell, and Bitcoin dipped from around 93,000 to about 92,000-ish, based on, based around, this high yield Japanese government bond yield, as well as the Greenland issue between the US as well as Europe. So it's like a liquidity drain again, less easy cash flow into crypto. I think for us, there are holders of Bitcoin, right? Short term, next days, weeks, I think, or even months, right? It could be pretty bearish. This could keep pressure on Bitcoin. If yields keeps on climbing up, essentially means more unwinds, mean more selling, especially in Asia and for the rest of the world too, whomever borrows money off Japan. Because essentially a lot of time during this kind of situation, Bitcoin will tend to be treated like a risk asset here. So it drops with stocks. Okay, but longer term, I think for now it's neutral. I wouldn't say bullish. But once the dust settle, higher global rates might weaken fiat currencies like the dollars, right? So making Bitcoin a better hedge against inflation, right? So once Japanese yen, goes up in value compared to the dollar would definitely seem cheaper. And that's why people might buy dollars to buy more Bitcoin, right? So that could also bring up the Bitcoin price in the medium to longer term time. But last thing I just want to call out is, let's look at the bright side. Okay, let's look at the bright side. So obviously, US Fed continue to print and apply quantitative easing, right? So that means money printer is back on. The Fed is set to inject a massive liquidity of around $55.3 billion into the system over the next 2 months, right? And that essentially starts tomorrow. So guys, if you're holding, don't panic sell. This might be a dip to buy if you believe in Bitcoin cycle. If you dollar cost average or pound cost average, I think a dip is always a blessing, right? That's my opinion. That's not financial advice, of course. And yeah, we'll have to see how this all plays out in terms of the Japanese bond yields, whether it goes up further. But for now, I think the sell-off story for Bitcoin earlier today, I think a few things: Japanese bond yield, as well as the macro, like the tariffs noise from Greenland, from Trump for Europe. So yeah, this could be things that's affecting and suppressing the Bitcoin price from moving up. Okay, so that's it, guys. That's it for a quick update. Let me know your thoughts. Are you guys worried about this dip, or are you guys buying? Just let me know in the comment section. And I'll see you in the next video. Bye.